All right. And let's see. Slideshow, play from the start. All right, here we go. I'm going to
It hasn't quite hit my screen yet, Steve.
Hasn't hit your screen yet? All right. So I have to do, thank you for catching that right away. Share screen.
There we go.
Yay. Play from start. All right. So I'm going to wander around a series of topics. They're all niche-y, fringe kind of things. Because I've found that there's the saying riches and niches is pretty true. Like I've heard many people do, I have some buy and hold. I've got some passive. I have a small pool of mortgage notes left. I went into mortgage notes really big about 6 years ago, and then immediately pivoted back to unsecured lending, which is what I had been doing for about the last decade, and traded my little note portfolio, my little 30 or 40 note portfolio for now, about 1,500 active short-term loans. So invest in notes, maybe, maybe not, and we're going to talk about that. The usual disclaimer, this is not legal or financial advice. I can tell you how to lose money like crazy. So this is my experience, my opinions. This is not a solicitation for investment or sale of any product. What I will tell you is I am available to you to the maximum of my ability at any time to talk about this or any other harebrained idea you have, because I sure got some. So there's my email, my phone. I put it in the notes too. And so I'm going to talk about note investing first. The 3 Ps in note investing: paper, property, and the person. They all have some level of nuance or defect or something that makes them really good. We're going to talk about those. Is it a good note? Is it valid, recorded? What are you buying? Do you think you're buying a first and you're really buying a second? That's happened. The borrower, my 2 rules are: the borrower always looks like the property. Somebody was wandering over to Memphis. Was that Wyatt? Yeah. And,
yes. Yeah.
and Memphis is not Santa Rosa. I'm in Alexandria, Louisiana, which makes Memphis look like Beverly Hills, right? I've got 5 properties there, and I'm going to talk about them a little bit. If you like cash flow, it's not in California. And the house interior always looks like the payment. So if you have a defaulted note and you're looking at a unpaid balance, and you're trying to use a Zillow to see what it's worth, and you have to remember, if the payment history is bad, the house is trashed, right? So just remember that, right? That just means that there's a price for everything. That's my partner's favorite saying, by the way, and there is. So 6 years ago, I spent about $700,000 and bought 26 modified loans. And I was going to go to the beach and play golf. I'm no good at that. So the notes averaged 10%, and they had about 10 years remaining. They had 5 years of seasoning. These were defaults from the crash that a hedge fund had bought. And what their deal is, they basically did is, if the house had $100,000, if the $100,000 note, they would resell you your house for $50,000 on a 15-year, 10-year note. And they did a great job. They helped lots of people. They made bazillions of dollars. And then they started to wind down, and we cherry picked 26 or 30 out of the pool. I've got 7 of them still. They've paid off, a couple have gone to foreclosure, there's this and that. There's the typical kinds of things that you'd find in lower end properties. This is, so here's an example. I should have taken the borrower's name out. Everybody put their thumb over the right-hand side of the screen. So this is a note that I bought 6 years ago. So I bought it in 2016. And in 2018, the borrower went Chapter 13. They're behind on their taxes right now, a pretty big chunk. The trustee is doing whatever this trustee does. I think they take it right up to the edge and then they make a payment. Right. And so I don't like that game, by the way. They've paid $5,500 toward principal and interest in the last year. Their total Chapter 13 plan has been reduced down to $1,200 a month. The borrower is semi-retired, has some disability. There's some stuff, right? He's an old guy like me. There's 70 months to go on the plan. He's modified it down twice. His income is okay. I went in and took a glimpse at his Pacer account. You can see anybody's bankruptcy history, by the way, if you get an account at pacer.gov. So I want to go into how do you buy notes? And you buy notes like this from people like me out in the public market and not in these private public markets. There's several websites that have these things. You buy them at meetups, you buy them at note conventions, you buy them from dealers. So if this loan was paying 9%, and let me go through the note terms. So that's a 9% note, 28,800 left. There's $11,000 in back interest for a total due today of $40,000. Right? Notes are sold on principal balance, unpaid principal balance. So you would make a bid on $28,000 with a side bet that you were going to get $11,000 extra. And this happens a fair amount of the time. It's not bad. So that's why have I been hanging out of this foreclosure, right? Or this bankruptcy? It's like he's gonna sell the house. He's gonna sell the house. Last payment was $635. That was a catch-up payment. So you'd play with your calculator and say, well, if this note was out on a market, what would I do? I'd go and look at it. It's in Michigan, which is like don't ever go to Detroit, right? But it's in Pontiac, which isn't bad. And here's a nice little 1950s 3-2 house. I think it's 1,600 square feet. I want to talk about asymmetrical risk and reward. I forgot this. You want to try to lever things so that you can have a bigger upside than your potential downside, or the odds are in your favor. So I bought this big pool that was paying a 10% coupon, and I paid 85 cents on the dollar, and I was all in, getting I was getting $12,000 a month in principal and interest returned. I was getting about $5,000 in income, and there we go. There's my nest egg for my monthly retirement stuff. Again, things can go wrong, right? These kind of borrowers don't pay, right? All kinds of stuff can happen. If you want to take risk out, again, not giving advice to anybody, but an I bond pays 9.5% today. The base, nearly risk-free federal government I bond will pay 9%. Right? It's an inflation index bond. Problem is, you can only buy up to $10,000. So this came to me just recently, and my lunch friend, I have lunch. There's a hint. Go have lunch with people smarter than you as much as you can. Bill says, so did you buy your I bond? I said, I forgot. And he said, you're buying a lunch. So that's the punishment when you go to lunch with Bill, is if you don't follow instructions, you got to buy lunch. So So there's the link for Treasury Direct. There. I made everybody $1,000. Ta-da! So if you can't afford to lose money, if you're new, if you're old, right, and you don't have time to make it back, well, then you got to balance some of this stuff. But if you still got the gambling itch, then we go over to the other side, and I'm going to try to create some asymmetrical risk reward, and I'm going to buy a delinquent second. Right? It's gambling at the beginning, but again, there's a price for everything. Maybe I'm going to tell a story at the very end about a third. You can buy a distressed house and fix it up. There's folks here that been doing that. And the risks there, for me, the biggest risk is time. And the discoveries that you have when you go into a 1980s house and you find that the house wasn't built quite so hot, right? Figure out where you can add value. And have we done a meeting about Senate Bill 1079? Have you had Matt Kelly talk?
Not yet, no.
Okay. Afterauctionbid.com. So the legislature, to show the public that they were trying, has created this process where if you lose your home if a home goes into foreclosure and the bank takes it back, some people have the ability to buy it from the bank. The people that can buy it from the bank, and this is to prevent the Blackstones of the world of just gobbling up all the housing, which they have done pretty well. There are hundreds and hundreds of thousands of houses have gone out of the individual ownership world. So if B of A forecloses, you can buy that loan for what they took it back for. So if nobody bid up to the buyer minimum, to the owner minimum, you can buy that note you can make a bid to buy that note from that price. So there's a way to find some equity. So to tie that into the seconds question, so if me being the gambler that I am, I'm looking for a foreclosed second that has a first that I can service. Right? I'm looking to service a first to buy some time. The only people that can take advantage of this law are people who will live in the house for at least 1 year. So what they're trying to do is build home ownership, live in the house 1 year, or if you're a charity whose focus is affordable housing. And affordable housing has a very broad definition. Simply means under market rent for some period of time. Right? So I can buy a house in my charity. I can rent it to a family for under local rent by some percentage. So if I'm sitting in Novato, so $3,500 a month for a house. If I rent it for $3,000, here I am meeting the affordability rule, and my charity can rent this house out for a couple of years and then dispose of it and buy another one and do whatever. Right. So the focus is home ownership and affordable housing. What Matt has done, and Matt's a super smart guy, he's built a pretty simple engine that scrapes all 58 counties of active foreclosures or that have been taken back, and that the clock is ticking. There's a 15-day window from when the bank took it back for you to make a bid. And then you have up to 45 days to get your cashier's check in with your amount. Right? It's interesting. There's not much of it going on in Novato right now. There was one in Mill Valley that I thought was interesting. I haven't pulled the trigger yet because I'm just too scattered, and frankly, just there's a little learning, and I'm busy learning other stuff. But this is how my children are going to buy their first houses. There's a pretty nice one that just popped up in Fairfield, by the way, which is in our market, and I bet there's lots of them up in Humboldt County. That's a fragile economy up there. I used to run the I was the outsourced vendor for the Humboldt County Court for about 5 years, doing fine enforcement. And so I intimately know that the lower half of that town. And that's who loses their house in foreclosure, right? You can create your own note. So now we're going to take a little trip to Alexandria, Louisiana. I've got a partner in Alexandria that I think is just the best. This woman is on a mission. She's a real estate agent. She's a single mother. She's had a couple of properties when she came to me. She's a contractor. She's got all the tools. She drives a truck, right? This woman has a paintbrush in her hands Sunday as the sun's going down. She is the partner that you want. And she is on a mission to house by house, save her town and provide housing for single mothers who are on the edge of going into homelessness. Right? This is, her God's mission, but she also wants to make some money. Right? So we bought this house, 424 Leland, from what's the name of the company? I still have it here. It's from I put it somewhere, from a tough lender in the East Coast, and they write high interest consumer loans. This was probably a 10% mortgage. We bought the foreclosure from them for $25,000. Right? So how do you buy a whole house for $25,000? Wyatt may have done some in Memphis for 50. You used to be able to do Memphis for 10, right? Yeah. So she has a Section 8 renter. It took her no time at all to put the house together. So I paid $25,000. She put in $6,000 and a bunch of sweat. And she has a Section 8 renter that moved in at $750 a month. We have a note that we will execute in the future, but right now I'm getting a $300 option payment. So $750 a month, I get $300 a month on my $25,000 purchase, and that roughly is an 8% yield. We have an agreement to sell this property for $40,000. Right? So what I did is I took my little calculator out and I said, if I bought for 25, and I said it was 18 months, and then I solved for interest. If I bought this note for 25,000, I collected $300 a month for 18 months, it'll be shorter, and I got $40,000 at the end. That puts a 43.5% yield. Right? As the guys that we all learned this from, good enough, right? Good enough. It might sell faster if she can stabilize and get me taken out in a year, maybe 6 months. Well, the percentile yield is better. If it goes, there's a hook in the note to encourage prompt payment. Every anniversary, $2,000 is added to the note balance. So I love messing with the calculator. So if she wants to keep paying interest only, the world collapses, she can't get financing, right? Every year, the balance will go up $2,000. So next year, it'll be $42,000, and she'll pay me $3,315 a month. So I have an inflation adjustment built into the note, and enough of a poke that she wants to get out of it, right? Yep. So if you do not have a calculator that looks like this, you can go to the App Store and download an HP 10BII, a 10B2 calculator. Bill Tan, who runs the Los Angeles Real Estate Investment Association, who's another guy who's been around for a while, right? Bill's been around for decades. Does a great course, does a cheap one-day course on how to use the calculator. The problem with Bill's course is it's 10 hours long. He answers questions until people wear out. So, but you can look this up and see. So anyway, so I did a couple of spreads. I'm going to jump to partials. People are looking for how do you get money? How do you make a little income? And partials are all the buzz these days. So I have this $40,000 note, and maybe I need some cash. Maybe I need $20,000. And so if I have an amortizing, so I did this for an example. If we have 120 months, 8%, $40,000 with a $485 payment, that's a good note, especially since I paid $25,000 for it, right? But if I needed to get some cash out, like I had something better to do with the money, I could sell half of the note. And that's interesting to investors, right? Back to asymmetrical risk reward. We had this $25,000 house that we've now declared is worth 40. We just magically made that happen, right? It cash flows, so it is worth 40, but it's actually worth way more than 40 by most metrics. But what if things get worse? What if things get, all this stuff? Well, I want to be really well protected. So a 50% loan to value position, $20,000 is a reasonable, safe thing, right? So from my perspective, if I sell half of this note, I'm into the note for $5,000 and my payments pick up in 5 years. You get the next 60 months. So you get the front end and your yield is 15.9, right? So 16% return, 50% loan to value. I think this is a reasonable thing for people to do with retirement accounts. I have a note about this size in an HSA paying $500 a month. It makes sense to me. Again, I'm not offering to sell notes. I'm saying this is the kind of stuff that I buy. Right?
Steve, do you want questions at the end or during?
Yeah. Okay. If the question is specific to the slide, to this particular topic, as I jump through topics, please jump in.
I do have one. And when you look at the yield of the person buying your partial at 15.9, psychologically, if you said, hey, I've got this note and I want to borrow against it, what rate would you charge me? I don't think they would come up that high.
That's right. That's right.
So then why not borrow against the note instead of selling a partial?
And I owe people $900,000 right now.
Okay.
At 9%. At 9%. I borrow money at 9%. My business is high interest subprime lending. So there's enough margin in there for me to do that. Right.
Excellent.
But yes, I would pledge, you'd borrow $20,000 or $30,000 against this note at 9%. And I have some of those arrangements too. I've got a place I'm going with this a little bit. So
there you go. Sorry to interrupt.
No. I will go down rabbit holes. You got to bring me back. So this has benefits to each side, right? You're safe. The note's been assigned to you. You put it with a loan servicer. There's some fees to do that, but you don't have to. So Jeff, to that question is, if I'm borrowing the money, then you have to trust me because I'm between you and the asset, right? I have been death on the kinds of things that are out there for limited partnerships and that kind of stuff, and I have been proven wrong. There are some people out there, some syndicators out there that do stuff that I couldn't even come close to doing, so. On a quick jump on where to get good information about buying paper. So I've put up, there's a free course at Paper Source. Gordon Moss has some YouTube stuff out there. I like Gordon a lot. He's like me. He is not a professional presenter at all. He just tells the truth. JKP Holdings. My wife just got home. JKP Holdings has got some good information and some really good tools. Tom Henderson is worth checking out because Tom was here when this stuff was created in the 80s in Texas. He is a character beyond characters. Gary Johnston runs a real estate financial education class every Memorial weekend in Atlanta and every Labor Day weekend in Santa Ana. I didn't get to it until I was like 58 years old. I was about 40 years later than I should have been. It changed. I thought I understood money. I really thought I did. I've been collecting millions of dollars a year, running the collection agency and being a commercial landlord. I thought I knew what I was doing. I had no clue. Pete Fortunato will speak at that event, and I just think Pete is great. And 4 years ago, almost now, I had an opportunity to bring a partner into my business, and we were trying to figure out how to do it without creating a taxable event. And we did an exchange, which was an idea that Pete gave me. My partner gave me 2 pieces of Sonoma real estate. He gave me a condo and a house, and both in Roanoke Park, in exchange for half of my business. I sold the condo and made some cash, and I had a long-term capital gain against stock, right? And I have kept the house in my children's trust, and that is about a $300 and some thousand investment at the time that I acquired it, with an option that I have not exercised yet. Whole nother tale to go down how that works. Well, I paid $100,000 cash for an option to buy this house, had $350,000 in equity. And that was 4 years ago. What's happened to Roanoke Park real estate in 4 years, right? And I put it in my kids' trust, right? So the kids own the option. The option expires when the mortgage is paid in full. I have a 3.1 or 2.99% mortgage that I am servicing, that I am not on the hook for, right? Because I'm just servicing it. I didn't sign the loan doc. And at any time in the next, there was 8 years in, so anytime in the next 22 years, or now 18 years, I can exercise that and bring it in and put it into the estate, right? So it pays $34.50 a month. Free net cash flow of $1,200 a month. And they take great care of the place. They have dogs. They know how lucky they were to let me to get a property. They had 3 big dogs, and nobody would rent to them. My deal with them is, you can have the place, but I'm not fixing a thing when you move in, because I know you're going to damage it. And they were great with it. So anyway, where else to get information? John Burns' real estate newsletter, anything that Bruce Norris puts out, anything that Sean O'Toole, a property rater, puts out, and REIA groups. Hang out. Let's come hang out with us. This was ugly. Isn't this beautiful? This is 1200 Linda Flora. I probably talked about this in a prior meeting. This is my syndicating nightmare. I was part of I put $200,000 in a pool and a syndication with other investors. They raised $1.5 million. The builder borrowed $3.5 million to build this house. So it was all in a $5 million in. There were delays. The city denied his elevator permit. Okay, there's an elevator in this building. The back side of this building is worth looking up on Zillow. It is worth looking up 1200 Linda Flora. So here he is, he's in default on the first. I can't service a $3.5 million note at 10%. It was like $30,000 a month in interest. So, and he owed me 200 and the group 1.5. I was really lucky. I've got a lot of experience in suing people. I've been running, like I said, I ran a collection agency for 20 years. So I know how to go pick a fight. But I got really lucky and found a foreclosure expert, a company called Master Funding down in Temecula. If you're doing stuff in Orange County, Riverside, and you want to play this scary game, I only go to them. I look for projects in Riverside County to take just so that I can work with them. But anyway, this thing was a nightmare. 3 years. It finally sold for $7.1 million, and it was okay. It turned out okay. I don't think the builder made anything. The two hard money lenders on it, they made a fortune. They took every bit of equity out of this house. But so that's my that turned me off of doing partnerships and doing things with syndicators. And I just chose the wrong people. I went to a presentation. This guy spoke at a REIA in LA or down in Orange County, and I drank the Kool-Aid and I signed up. Don't do that. What would be a good rule? Don't buy anything from somebody who says they're giving education, including me. I'm going to try to bring this closer to some kind of close. You can have, I was told, you can have anything you want. You just can't have everything you want. And I was told to really lean into what I like and what I'm good at, and don't do the things that I'm not. I've been the worst clerk my company has ever hired for the last couple of weeks because we've been short on staff. And I can't wait till we get somebody trained. So I love great ideas. I just love great ideas. I love taking stuff and saying, what if? I like speed. I like control. I have to like the people that I do business with. They have to be my friends. I'm no good at details. I'm no good at follow through, but I am the world's best starter. If you need something launched, I'm your guy. So the other side is you can buy a note from me or anybody. You can make your own. There's ways to make your own notes. You can use can you use the calculator instead of a construction crew? That's really been good for me. And figure out what lights you up. And that's the end of the slideshow.
Absolutely fantastic, Steve. Can we open it up to questions then?
Yeah. Let me stop my share. Yeah.
Who wants to start?
Oh, well, Rhonda, thanks for looking on Zillow. Rhonda just said she looked on Zillow at the property. Isn't that was I was so out of my league.
Who was the syndicator for Linda Flora?
It was Paradigm Funding out of Riverside County. I've shoved the names out of my mind. I really should advertise or somehow say who those two people were. But it was Paradigm Funding is who put the group together, along with the Garachi law firm, which is the big high money folks down in Irvine. They're never going to see one of my deals. So
they are big on presentations.
It was
Vegas, Southern California.
It was so pretty.
Next question. Sean, you had a comment?
No, I was just trying to think of a question to ask. Covered a lot of territory there, and
Well, and I was trying to say, here's, here's the stuff. Oh, let's see, what can I do? I can do this. This is a job I like. I do this, you like this. I get checks and then I use my phone and I deposit them. So this happened today.
I've heard that happens, but I've never done that yet.
Well,
That was a hard day at the office.
well, this is, this is $5,600 and it was 10 acres in San Bernardino that I funded the land flipper $10,000 to buy. It was $1,000 an acre. He sold it for $2,500 an acre. Right, so that was a decent spread. But he sold it on terms. He sold it on a 0 interest note. Borrower made payments for a year and then decided they're going to pay it off early. And so I got a check for $5,600 today, and I've been getting $800 a month for the last year. So
Nice.
yeah.
Good day at the office.
Yeah. And so I'm giving lip service to doing less. So I've really been trying to build passive investment. One of the things that's helping me a little bit get used to the idea. I've still got in my head that if I'm not working, I'm not doing what I'm supposed to be doing. Right. I would rather work than play golf. I'd rather work than watch TV. I'd rather, I just like to work. I like to create stuff. But I've been doing passive investing in an IRA, an HSA, a 401k, where I'm forced to be hands off, right? Because I can't buy a house and hire the contractor, fix it up, and then sell it myself, in the IRA.
Steve, I love the presentation. Notes have always intrigued me. I've read a couple of books, on kind of the high level idea, particularly around like kind of rehabbing notes, like non-performing seconds, for example. I think that was one of the things you mentioned. But I mean, once you've got like your self-directed retirement account established, for somebody who's not so well connected to some of the players in the note industry, how would you recommend, like, where would you go to start, start small, like, would you go to like an exchange or somewhere else? I mean, how would you get started at that point?
I like this imaginary thing about control, which I know I don't have control over anything. I like stuff. I don't like retail. Right? I don't like retail. I can't buy anything at Safeway unless it's on sale. My ice cream choice, my ice cream flavor is the one that's $2 off. Right? I bought a new used car last year because I couldn't buy a new car. I love discount. So let's see if we can create a note. Tim, you said that you were buying an HVAC business. That's fantastic. That's wonderful. Well, it's just going to get hotter and hotter, right? You've got your built-in inflation. Some of these people, Wyatt wants to put some money in his retirement account. You need cash to buy new equipment and trucks and whatever, but you've got a bunch of people that are making monthly payments. They're on a quarterly maintenance agreement, something like that. So you've got people paying you, say, $3,000 a month for service contracts, but you need $30,000 to buy a truck, right? So how about if I do what we lovingly were taught is a 10 for 12. If I give you 10 payments up front for the next 12 payments, then we both win. You get $30,000 in hand against your $3,000 a month. And so you could have, if you kept it, you would have had $36,000. But $30,000 today versus $36,000 in the year is only a 17% discount. If you were going to run that business on a credit card, you'd be paying 25%. So maybe this is not too bad of an idea. So Specifically, my landlord in Orange County, just put a new air conditioner on my unit. He paid $7,600 and he's really unhappy. He's really unhappy. I'm going down there next week and I'm going to offer him 5 rent payments up front for the next 6 months rent. I'm going to hand him his $7,500 that he was out of pocket all at once. And maybe that solves his problem. And what do I get? I get the 6-month free. Is there any risk? The risk is if the tenant doesn't pay the rent. I'm the tenant, right? When you plug that into the calculator, that's 36%. Right? So there's different ways to do this. The gym will give me, if I pay for the whole year upfront, they'll give me, they'll take 11 payments. Well, I said, would you take 10? They said no. And then I came back and said, really? And they said, okay. Right? What's the risk? I'm not going to go to the gym. I'm going to die between now and the end of the year. Right? So it's a mindset thing about who needs money? Who's got something that they can use to secure this money? Tenants, landlords. Maybe there's offers there. Well, you've got this property, blah, 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 blah. I'll advance the rent for your tenant. I'll collect the rent from your tenant and I'll give it to you up front. I'll give you 5 for 6. So there's ways to do that. I finance all manner of weird stuff. I finance a lot of high interest car notes. That is not for the faint of heart. I'm betting on inflation, keeping my car values at least par to what's owed. So there's that kind of stuff. I finance land sale notes, and some of those go bad. So I have to make sure that my buy price allows me some room that I can recoup. So if we'll use $10,000, I'll pay somewhere between $5,000 and $8,000 for a note against a $10,000 asset, right? Because I've got to factor in things. $100,000 note is a better note than a $10,000 note generally, right? The higher the amount, the credit quality gets better. Right? There's an awful lot of junk paper in the land sale business. There's some gurus out there just giving it away. It's just, so I'm looking for opportunity. I'm building network there because I know people are going to have trouble with their notes and they're going to want to dump them at a discount. And I know how to repossess property. So that's one of my superpowers. Is I used to be a bad guy. I garnished, I don't know how many people's paychecks I've been in and properties I've posted for sale. I ran a very large collection agency, and we represented a lot of hospitals and businesses, and we collected money. We were polite, but we were, got to pay the bill. So, but I have no idea what to do with a hammer.
Janet, you had a hand up?
Yes, I was just wondering about the charity. Do you have to actually create a 501(c)(3) to start the charity, or what did that mean when you said that you for the after auction bid?
Yes. So yes, and not giving legal advice.
Yes.
It has to be real. You have to be at a point in your life where you can do that, and it has to be real. The charity can generate income tax-free and can pay the directors, who can be my children, right? So my children can serve on the board of the charity and be responsible for moving tenants in and making sure, whatever, that's okay. But I cannot, I can get some expense reimbursement. I'm working we're working in fits and starts and haven't given us the attention that it deserves. I have a partner who's on the screen, who is, we're going to open, she is going to open a care home specific to disabled adults. So these are typically cerebral palsy or Down's adults who have aged, whose parents have aged out and can't take care of them anymore. And so you'll have 4 adults in a care home. They need round-the-clock care. They're semi-ambulatory. There's a lot of stuff that gets done, but the state pays the bill. And my tenant, my favorite tenant now, and I think for the rest of my career, is going to be the government. I think we're gonna, we're gonna have ebbs and flows, but the government is always going to make Section 8 payments. The government's always going to pay disability payments. And that's the most reliable, so I barely care who lives in the property. It's where does the rent come from? The rent comes from the government. Flavia.
Good deal. We've got a question from Flavius.
Yes, hi. If you end up with a house through a second mortgage, either by buying it from REO or maybe you buy the second and foreclose, but you end up with the title. My question is about the first. Can they accelerate that first note, or can you pay it in the schedule it's set?
So here's the opinions, right? The opinions, not advice. Of all the folks that I know that play in this space, that played in this space in the day in 2009, 10, only a couple of notes ever got called. Right? So as long as the payments are being made, the bank will not have a priority on it. Where the bank will have a priority is one of the real assets to buy are 3% mortgages. If you can control a 3% mortgage, that's below inflation. You're making money making those payments, right? And so, and those notes pay down and build equity really quickly. So what's going to happen is since we got flooded with this, 2.9 and 3.25 paper, some banks are going to be in a cash flow crisis, and they're going to scour their records on an annual basis and look for property that's changed hands, and then decide if they're going to call those notes due. If the note was a conforming mortgage and has been sold upstream to Fannie or Freddie, I'll make a bet that the government isn't very efficient about getting to that, especially if the note's being serviced. So yes, it is absolutely a risk. And going back to that slide about that mansion that I put that money in, I couldn't handle a $3.5 million buyout. Right? I didn't have that much cash. But if it was a $500,000 house in Roanoke Park, sure, I could cover that. I could find it. Jeff would help me.
In a heartbeat.
Right. Especially if there was a bunch of equity in it. Right. So if I buy the note, if I buy the second at a discount, and that builds a little equity, and inflation has built a little equity, and there's been some pay down, and you can find all this out when you run a title for the property. You can see when the first was originated. You can you can use the calculator and make a guess at what the principal balance is today and say, can I handle it? Right? So can I handle it? That house in Roanoke Park is exactly one of these things. It's a 3% note. It's 8 years in. It's about $280,000 against a house that's worth $750,000. I'm good with that. I can find that kind of money at a good rate all day. Right.
Yep.
So you have to look at the condition. Back to the 3 Ps. You have to understand the paper. You have to understand the person. You've got a buyer, and you've got somebody who's been evicted. You got all kinds of things. Very often you're going to, depending on where you get it in the foreclosure cycle, if they haven't been removed from the property, you can often rent it, but not often. It's possible to rent it back to the owner. Right? I have the other end of the spectrum besides that $7 million house is the $13,000 house in Greenville, South Carolina that I'm still fighting with 7 years later. This guy is that guy. He's that guy. And it's too small for me to just go put him out of his misery. And so it's just, but it's, the property is worth 50 now, you know, so I'm okay that he pays sometimes. So I'm the bank, right? You know, and it's just, you know, there's some of these things you gotta look at and say, what's the downside? I've got somebody living in my property for half price right now. Okay, sure, you know. Yeah, it's going to cost me more in lawyer fees to get him out than the property's worth, because he's going to fight me. Yeah,
Half price, but
yeah,
it's $300 instead of $600. And
Yeah.
how much is it worth of your time for the $300 that you might get out of the guy?
Right.
You know,
Right. And I bought that note from, speaking of buying notes out in the public world, that note came from Harbor. Never buy a note from Harbor. Never buy a note from Ocwen. Those were both predatory lenders, and those loans are still floating around. I just showed you one, right? That paper is still out there, and people are still mashing it and adding 10 grand. Yeah. There is the difference between the note broker world and the real estate broker world is there is no licensing, no fiduciary responsibility, no escrows. It's just the Wild West. I'm a note broker. That's all you have to do.
Steve, a question for you. I mean, I know Ocwen's got a terrible reputation. Tim just echoed that. But one of the interesting things they did when they did loan mods was they took an equity position in the property as part of their loan mod.
Mm-hmm.
So you're not only getting a low rate and perhaps buying it at a discount because of that, but you've got the equity kicker if the economy is right.
Mm-hmm.
And that doesn't change your mind about Ocwen as a seller.
For me, it's the brain damage of having to deal with a borrower who just got a bad product. We just got a bad product. I found my folder on the Leland property, and I bought it from Shell Point. And Shell Point was doing business as some other name that I kind of knew. New Res, R-E-Z.
Yeah.
Yeah. And I got the right rep, I got the right local guy. And I understood the note. I understood that they were, being courteous and careful with getting the owner out. There was, it was an amicable foreclosure, and it was a way to make a win-win. So Ocwen buying what they call a tape. I'm not good. My partner would love me to do it because that's big numbers and data crunching and all that stuff. And I don't know. I'm just not into it.
There you go.
Doesn't mean that it's not a good idea. There's a whole industry around this.
Yep.
Yeah.
Last minute questions for Steve before we let him go. This has been fabulous, Steve. Thank you.
Well, great.
Anybody with a last minute question?
Yeah. Have you seen an increase of inventory on tapes, defaulted notes now?
Well, I don't shop tapes, and I will tell you from my experience is it takes a couple of years for the inventory to flow down to the street level buyer. Years, right? So the defaults that are happening today at Bank of America or Wells Fargo are going to take a year to work out, right? It's a year to go all the way through, and then they're going to be pooled and sold to only a couple of buyers buy all of these from FHA and Fannie. And then they're going to sift through and take the ones that have good value. And then they're going to get down to the junk. And that's going to go to another layer of hedge funds. And then those hedge funds will take the junk of the junk and promise us amazing returns. Right? I see all the time the buzzword that just bristles me is above average returns. You know, I've made over 100% on some deals. You know, okay, what are you gonna? Oh, that's my average. What are you gonna do? You're gonna beat that? No, you're gonna offer me 12. Well, you know, I just showed you how to get 36 by prepaying your rent, right? Or buying a rent stream from somebody, or you know, I work with the local Remax folks, with the big group that owns owns a bunch of stores in the North Bay, and we write a little 6-month fixer construction loan for people that are putting their house on the market. You know, they're equity rich, cash poor, and I'll write a quick little note at 9% APR. As long as there's equity and as long as the house is a marketable house, right? As long as the agent knows what they're doing. But that note these days has been getting paid off in 4 months. If I'm adding 9 points up front and getting paid in 4 months, you know, that's pretty good, right? That's good enough. So yeah. Well, no, 27-ish.
Oh, okay. That was close.
Yeah. I don't have anybody out there selling tapes offering me 27%. Yeah, but I'm also not looking to do millions of dollars in volume. No. We service my day job is we service, what do we have now? Active 1,600 accounts. That I don't have time to shop a tape. You know, I'm having too much fun doing land deals and financing medical procedures.
Well, Steve, thanks again for sharing all
you.
that information.
All right.
Sean, you want to open it up to have wants here in the few minutes we've got left?
Yeah, anybody have anything that they're trying to sell? Anybody looking for money or looking at anything? We got a couple guys here that loan money out.
Yeah, I might be looking for money for that industrial building.
There you go. Steve and Jeff are both in that business. They know where Eureka is on the map. Or
It's Arcata.
Arcata, yeah. It kind of looks all the same once I get past about maybe Cloverdale.
I'm just not sure I want to go through another SBA process.
Right.
SBA is pretty tough.
Nightmare in Fort Bragg.
Yeah.
I did an SBA loan and years ago, and the only way that it worked is I hired somebody to take care of it.
A facilitator, yeah.
I hired an SBA guy that worked at Bank of Richmond, did a side job, and made me fit the box, because I just was not going to be able to do that kind of level of detail.
Yeah. I thought a VA loan was tough. Boy.
I've got a couple deals right now that I'm maybe looking for a joint venture partner on. They're deals where one of them I offered terms to a seller that wants to get out of town and move to Idaho. And she wants all cash. So I may be looking for a joint venture partner. It's